Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 22nd, 2022, and I'm here to declare the bear market officially over. The bear market is over, and I'm going to tell you why. I'm going to be looking at the DXY as usual. I'm going to also be looking at Bitcoin, the entire cryptocurrency market cap. We're going to be looking at Bitcoin dominance and other altcoins, all right? So if that interests you, then stay tuned. Let's get into it. Hope you're having a great Thursday, guys. Let's have some fun, right? It's really been a long time coming. This has been quite an ordeal, yeah? We've been waiting and charting and investing and playing defense and protecting, and I think we're finally here, okay? Let's start with the DXY, okay? And I call the DXY the catalyst. This is the underlying asset. This is what moves the market, what moves traditional markets, and what moves cryptocurrencies, okay? I'm not going to bore you with my count. You already know that this I count as an ending fifth wave diagonal, okay? And that's the end of the impulse, okay? That impulse that I'm referring to is something that we'd been in since, let's see, May of 2021, okay? So basically, this is the C wave impulse of this B wave correction, okay? So you'll see this is wave 5 of the actual impulse, cycle wave 5, okay? And this is the cycle wave because it took about 6 years, okay? So that's a proper cycle wave 5. From there, you get an initial break of structure, a 3-wave move down, and then a 3-wave move up, okay? So when I talk about the wave 5, I'm talking about the end of this 3-wave move up, this B wave right here. This big B right here, right? This is the end of the impulse. Every corrective pattern ends in impulse, and this is the impulse that we've been tracking since May of 2021. Okay, so that's what I'm saying is done. Okay, at that ending diagonal, which is a quintessential end of a wave. Now, from that, what are we getting? We're getting an initial break of structure, which is this 3-wave move here, and apparently we got a 3-wave move over here, okay, that came all the way up here. Now, what do we know about B waves? They're counter waves, and they can come to as high as the 1618 of the A wave, okay? So we could technically get a B wave that comes all the way to 112.67, okay? And it looks like we've put in a rounded top, right? At around 111, okay? So now let's zoom into that. Guys, if you're getting value, please like, share, and subscribe. Let's zoom into the rounded top. This is what I perceived in yesterday's price action, okay? And why am I considering this a rounded top? Let's go in even smaller time frames. 15-minute time frame, you can see. Here you have a sharp break of structure, okay? That is very important. This move right here is very important. That is not customary of an advance, okay? You don't see that, especially outside of wave 1, wave 2, okay? A wave 2 correction can be sharp. But as you all know, wave 2 correction corrects to about the 618 of the previous move, okay? And that's not what you see here. That's number one. Number two is you have another revisiting of this level soon after, okay? That to me is a quintessential rounded top. That is a change in momentum, right? You're basically changing trend. So you have your initial break of structure. So that would be your big A. It's a 3-wave move down. Then you have a 3-wave move up. That's your big B. Okay, and then you have another 3-wave move down. That's your small a. Again, these are reversal patterns. These are AB bases. This is exactly what we talk about all the time. This is another 3-wave move. This is probably a pivot. And then this is your move down. Okay, up until now, we had not gotten anything even remotely close to this. Okay, if this is indeed the case, and judging by the large time frame read, if you go on the 4-hourly time frame, again, you'll see that using this initial breakup structure, this 3-wave move down here, actually it's like this, this 3-wave move down here, the maximum retracement for this B wave, whatever this is the 112 region, okay? And given that we're close to that area, even misreading this as a reversal sort of rounded top, I'm fine with, because the larger time frame read shows that this B wave has to be constrained in this region right here, which we're in, okay? We're pretty much at the top of this region. Whoops. That was not a... We're pretty much at the top of this region, okay? So that tells me, that gives me a lot of confidence, okay? That's just one piece of the puzzle. Again, when you're doing analysis, you want to use a lot of different things. You don't just want to rely on one thing, right? We want to find confluence. So this is the DXY. We're looking at the DXY and we see, okay, I think we finally topped out. And we've been close to topping out for quite some time. We've been in this region, this general region right here, for 60 some odd days, I believe. Yeah, let's see. No, about 30 days. About 30 days, okay? About 30 days. But I think we finally topped out, right? And, you know, this reversal pattern on a smaller time frame essentially looks like a head and shoulders pattern, which is both a reversal pattern and a bearish pattern, okay? So for my pattern traders out there, you'll know that head and shoulders, inverse head and shoulders are both reversal patterns. The inverse head and shoulders is a bullish pattern. The head and shoulders is a bearish pattern, okay? You can check all of that out on Investopedia if you're keen. All right, so that's the DXY. This is why I'm saying the bear market is over. The DXY has been topped out for quite some time, all right? It's been making small moves to the upside, but by and large, we've hit a cap. Also, I would be remiss if I didn't mention our 14-year resistance here that has been wicked above in this move, okay? You can see our 14-year resistance if you zoom out on the weekly time frame. I welcome you. Do your own research, get your chart, you know, go on the weekly or monthly time frame and chart a line from the bottom of this advance to the top. Let's just show you real quick. Apologies for repetition for those of you who are subscribed and follow the work, but this is what I'm talking about, right? You have your 5-wave advance here. You broke it. You retested it up here. 14-year resistance. You're at that resistance. A lot of things are telling you you're topped out, okay? So let's move on from the DXY. DXY has been topped out. You've heard my analysis on the DXY. It's been a challenge counting the smaller time frames, but I finally think we do have some sort of reversal pattern going on, okay? Now let's look at another factor, but before we do, let's just double check the chats, guys. Please like and share. Shout yourselves out where you're listening, where you're watching from. You know, let me know who's here. All right. Let's go into Bitcoin itself, okay? Bitcoin itself. Yesterday, I was saying, oh, this is it. This is it. We had massive volatility, and this was the volatility we were dealing with. So yesterday was the 21st. We were hanging out here. We went up, and we went down, up, down. Okay. Guys, let's zoom in. 15-minute time frame. Look at this. This is what we got yesterday. Down, up, down. Right? A lot of confusion. People saying, oh man, we're going down to 0 again, okay, or 17K or 12K or whatever people say. But what do we know about three-wave moves, right? According to Elliott wave theory, a three-wave move is a corrective move, okay? And so we know that isn't impulsive, all right? This is a contiguous three-wave structure, 1, 2, 3, very clear, right? A wave, B wave, C wave, that's the final wave of that three-wave move. It ends in impulse. That ends that three-wave move. Now, zooming out for just a second, right? You have to understand the context. So here's the three-wave move we were just looking at, yeah? It is in context of another three-wave move. This one, 1, 2, 3. Do you see that? So your first three-wave move was up. Your second three-wave move, down. That means your impulse to complete, not the, sorry, that was incorrect. Let's zoom out for a second. I actually said what I didn't want to say. Here. It's all about context. It's all about context. This is why you have to count waves sometimes. Okay, here it is. Here it is. Here it is. Here it is. This is the three-wave move we're looking at. This is the initial three-wave move up, okay? Very important. This is the subsequent three-wave move down. Very important. This is another three-wave move. Very important. The second one. Very important. This should be an impulse up, okay? And again, it's the context that's important. Why did I have to zoom out and reread that on a larger time frame? Is because I needed context. And the context of this is what I talk about ad nauseum on this channel, the AB basing pattern, right? 2 degrees of AB basing on any time frame yields a reversal in price action, okay? So if the price is kind of, going down or sideways, whatever, it wants to go up, it first has to initiate this AB basing pattern that you see here, and that we counted with a big A, a big B, a small a, and a small b. 2 degrees of AB basing. 1 degree consists of an A wave and its counter B wave, right? And then you do it again. So this is what we're reading, okay? So when you saw 3 waves down yesterday, again, going back onto the smaller time frames, if you could read the context of the move, it wasn't too scary because it was countering this and leading into what may very well be your first impulse, okay? It may very well be your very first impulse of the bull market right here. 1, 2, 3, 4, 5 waves up, 3 waves down, continuation for wave 3, okay? That's what I'm seeing on Bitcoin. Now, even more convincing as to why the bull market is over is looking at the entire cryptocurrency market cap, okay? So looking at the entire cryptocurrency market cap, not just Bitcoin, you can see some really, really interesting things. Actually, I have this chart pulled up already and marked up. Let's go to it right here. I guess this is it. Did I not? Here, let's see. Huh. I thought I had it marked up. Maybe I opened a different one. Oh, no, this is total 2. My fault. I marked up total 1. Yeah, there we go. Okay. Was confused for a second there. Okay. Let's go on log and auto. Let's go on our weekly chart. Okay. And I want to show you something really interesting, very convincing for why the bull market has started and the bear market is over. This is not something you see every day, what I'm going to show you. This is not something you see every day. It's very, very rare, but very, very bullish. I'm going to show you 2 counts of bullish divergence on both the weekly and the daily chart. So a double bullish divergence. So strong bullish divergence on the weekly chart, which we're looking at right now. Okay, and I'm going to sort of draw out for you, and a strong bullish divergence on the daily chart. Okay, Where's the weekly bullish divergence? So first and foremost, I'll repeat this ad nauseum, and I'll just remind you. Best way to read divergences, bullish or bearish, is using the stochastic RSI. All right, obviously that's an opinion of mine, but it is loads simpler and more straightforward than reading regular RSI. Stochastic RSI is great. It's very useful, and it's, I think, best used for these divergences, okay? So you see, on the weekly time frame, you have all of these candles. Each candle represents a week of trading, okay? And on your chart in July of 2022, you can even go back and take this all the way to June, okay? Let's make this a little bigger. So let's just take this. Can I get in there? Well, let's just imagine that this line was coming here. Actually, let me do this properly for you guys. Let me see if I can. I should be able to, yeah. Here we go. Okay, let's just take it up here. Okay. Do something like that. Okay. So you should be able to see that now. I want it like this stupid zoom's getting in my way. Let me just get the date, June 13th, because I want to do this really precisely. I don't want to make any small errors. June 13th. There we go. Right there. That cross. Right there. Okay. Okay, so you're seeing what I'm doing. I'm lining up the dates, okay? So from here, June 13th on the charts, you've got a slightly higher high, very slight higher high in the total crypto cap, okay? This is the total crypto cap. Let's get started with that. Is the entire cryptocurrency market cap, right? Bitcoin, Litecoin, Ethereum, whatever shitcoin you can imagine. In addition to Bitcoin, obviously, and it's all kind of aggregated, okay? So this gives you an idea as to what the entire cryptocurrency market is doing in terms of valuation, okay? So the cryptocurrency market in its entirety has put in a slightly higher high since June 13th, 2022, okay? Now, in the momentum indicator, our beloved stochastic RSI, you've put a grievously stark higher high, okay? So what does that mean? What does this actually mean? Let me break this down for you in layman's term. In this consolidation, this accumulation period, where we've been chopping up and down, we essentially just went up and down in a small range. The momentum of the market, the momentum has increased drastically. This is the definition of accumulation. Okay? If you want to think of distribution, right, for my Wyckoff people or people who have heard these terms before. So basically, distribution is when you make a move, you consolidate, and you break down again. Like that. That would be a distribution. An accumulation would be the opposite. You make a move, either up or down, doesn't matter. This is accumulation reversal, okay? Accumulation, can also be your initial wave is up, you accumulate, and then you go up again. But accumulation is your ultimate move is up, okay? Do you guys understand? So this is the definition of accumulation. When the momentum of the market is shooting up, divergent with price action. That means even though you're not moving much in price, you're moving up in momentum, and you're going to mark up because you've exhausted selling and you've exhausted supply. Does that make sense? All right, so this is what our stochastic RSI is telling us very clearly in the cryptocurrency market cap. This is why the bear market is over, because this accumulation range is finished. Why is this accumulation range finished? It started from the bottom, right? Not to sound like a Drake song. Then it came back. It basically started from this liquidity point, this supply point went up and came back. That's a double bottom. You double bottomed in your range in price action, okay? And that is shown here. So this is the strong bullish divergence on the weekly. Now, what about the daily? Okay, so let's remove the arrows for the weekly. Let's jump down into the daily time frame. And now what you can see is very interesting. I want to focus on this region right here, this region right here, okay? So we're going to take our arrow. Guys, if you're getting value, please like, share, and subscribe. From the August 29th daily candle all the way down to, September 21. So yesterday's daily candle. Okay? So obviously in price action, we made a lower low. Okay? And what are you seeing in the momentum? Once again, you're about to cross. So this is unconfirmed, but you're basically hours away from crossing. You're about to cross bullish. You probably already crossed right here on the 19th. Do you see that right here? You crossed, but then you kept going down, okay? But it essentially, you can say it's confirmed because of this. You touched, your K and D lines touched. But this is strong bullish divergence on the daily time frame. So you have a strong higher time frame, so weekly bullish divergence, and now you're about to print a strong daily bullish divergence with a double bottom. Guys, do you see this? Double bottom on the weekly, double bottom on the daily, strong bullish divergence on the weekly, strong bullish divergence on the daily. Yeah, this is primarily an Elliott wave channel, but these are basic concepts in trading, in charting, that I'm sharing with you. I make use of everything at my disposal. If I see something, even if it's not Elliott wave, I'll talk about it, I'll use it, I'll add it to my analysis. This is why I can so confidently say with a high level of probability, a high degree of probability, that the bear market is over, okay? Some people say the bear market's over when the drawdown or the impulse to the downside finishes. But actually, the pain of the bear market is actually in this accumulation period, right? Here, it's painful, yes, but it's quick and it's decisive and it's impulsive, okay? And even if you're ill positioned, you just get stopped out quick. If you're in a leverage trade, okay, it is painful. Don't get me wrong. But this is also painful, very painful, because you don't know what you're doing. You're just going up and down, and up and down, up and down. It's tedious. Time. People hate waiting. This is what distinguishes the great traders from the not so great. Most traders fail by lack of patience. You guys, however many are you that are subscribed to this channel and that listen faithfully, you've heard me say, I'm ready for a bullish move for months, because I've been ready for a bullish move for months. I've been looking out for bullish signals for months because I perceived an accumulation phase, and I was looking and waiting for that accumulation phase to round out, to complete. Okay, so it's tedious for some people because it's like, all right, dude, you've been saying that, but actually this whole time, all 137 days or whatever, however long this has lasted, okay, 96 days, I've been accumulating. I've been accumulating positions, right? I've just been like a little squirrel, accumulating positions, spot and leverage positions, right? Buying on the bottoms of the range and just buying, not selling a thing, just accumulating 5-figure positions left and right. So when we do mark up and supply is indeed exhausted, I'm set. You know what I mean? It's just been doing the work beyond actually the beginning of this accumulation phase. I was doing the work back here when altcoins bottomed in May, right? I was accumulating then. So patience is tough. So this region is tough, and the reason I said it is that your time that it takes to say that the bull market, the phrase the bull market is over, you can either say the bull market ended here, or the bull market ends at the end of this accumulation phase. And so because I perceive this as being painful, tedious, even though we're range bound and we're not like marking down significantly or marking up significantly, I'll say the bull market starts here and the bear market ends here. I'll add this accumulation period. Okay, this is why I'm saying, and this is the context for why I'm saying the bear market is over. Double bullish divergences on the weekly and the daily, about to cross bullish on the daily. Do expect a markup on the cryptocurrency market cap. Okay, and why are we looking at the cryptocurrency market cap and not Bitcoin? This whole thesis, the whole thesis of this channel is using Bitcoin as a proxy for the cryptocurrency markets at large. Yes, but we're carefully looking at the total cryptocurrency market cap because we know that Bitcoin is going to be a laggard. Bitcoin is going to move in it's going to take longer to move than most other assets, most altcoins, okay? And why is this? It's because when Bitcoin's going up, okay, then altcoins are going up more. When Bitcoin's going down, altcoins are going down more in impulse, okay? And you can prove this to yourself when you look at the dominance chart. So if you just look at Bitcoin dominance, you can see it is on a course for a massive declension, a massive drawdown. You can see it in your momentum indicator, right? Very clearly. You're on the daily time frame. You're basically cross bearish right here. And you're just about to dump, okay? You're in overbought territory and you're cross bearish, okay? So that's your momentum indicator for Bitcoin dominance. The other thing about Bitcoin dominance that we've seen is that on the daily time frame, you can clearly see we've broken support right here, okay? And it's just not about looking at the chart, but understanding what it means. Bitcoin dominance tanking basically means altcoin are going to gain more value than Bitcoin in the same amount of time. Okay, you understand that? So holding Bitcoin during this next period, this period of time, this coming bull market, holding Bitcoin will yield on average fewer gains than holding any altcoin on average, okay? So if Bitcoin 10x's, okay, or 20x's or 50x's, most altcoins are going to do 100, 200 and more x. Do you understand? That is what this means, okay? But you can see it in the chart. You can understand what the chart's saying and what the chart's been saying. The chart's telling you that. You don't have to like figure out, oh, but you know, the adoption, this and just look at the charts. This is why I love charts. The charts the charts have shown you this for quite some time. You see, I have this head and shoulders pattern. It's a reversal pattern, okay? But more importantly is you count these waves right here. You have a 5-wave move, right? Wave 1, wave 2, wave 3, wave 4, a complex wave 4 that's just rounding out, going into wave 5, right? It's very clear. This is why, actually for this bull run, I'm not holding any Bitcoin, right? People think that's crazy. I'm not holding any Bitcoin. Not 1 cent worth of Bitcoin. Because I'm trying to maximize my gains, right? And you buy Bitcoin, if anything at all, right? Obviously, you know, the best move is to be into stable coins at this point, right? When dominance hits 24%, 23.9%. Best move is to be in stable coins because the entire market is likely to get nuked. But if you were to buy Bitcoin, that would be the best time. Okay? Not to say that if you're in Bitcoin, you're not going to make gains. Not to say that your Bitcoin's not going to go up. You guys know my projection for Bitcoin in these coming months, right? 6 to 8 months is 1.7 to 4 million. I have a video on that. I explained it, right? It has nothing to do with my opinion or my bias. I just looked at the chart and I did my analysis, okay? So I'm not saying that your Bitcoin's not going to gain in value. I'm just saying as opposed to holding altcoins, it's not going to gain as much value. And this chart shows us why. This is why we're not looking at Bitcoin as a proxy for the cryptocurrency markets at large necessarily to really see when this move in the complete when this bull market's going to start, because Bitcoin's going to lag most altcoins, okay? And now to really drive that point home, look at this case and point. All right, now we're looking at our watch list. Okay, so this is just the small amount of coins, of altcoins that I trade, okay, minus Bitcoin, okay, because I don't trade Bitcoin. All of these I've invested in, okay? Look at Bitcoin up 3%. Look at reserve rights up 22%. And it's not a 22% it went up and then it crashed back down. It's actually putting in a leading diagonal right here. Right? And it's about to break significant resistance. Look at this. Look at that. Look at this. What reserve rights is doing. This is a cup and handle pattern, okay? This is a cup and handle pattern, and it's at resistance, consolidating at resistance. Anything that consolidates at resistance is probably going to break resistance and target the height of this move, which is most likely over here, okay? And that's happening right now. It's up 21% on a legitimate move. And it also put in a volatile move yesterday. As you can see, let's go down on the hourly time frame. It went up for its... It ended its corrective move right there. So it went up a lot and it went down. And then it started its impulse. Okay, everybody did that yesterday. Most every asset did that. Okay, look at Zilliqa, up 5%. Look at XRP, up 12%. Altcoins will lead, Bitcoin will follow. This is what it's meant by alt season. The bear market is over. All right, my bad. I'm not the type to sort of flaunt my P&L or how much money I've made in any particular trade, but let me just tell you that my XRP's up big, my RSR's up really big. What else? And my Harmony one's up a decent amount, okay? And that's just my watch list, okay? If you go into a general watch list, you can see more examples of Bitcoin lagging. Okay, Bitcoin's up 3%. Like Compound's up 10%. Atom's up 9%. Algorand's up 8%. Chili's is up 7%. You see what I mean? Like, there's so many movers way beyond what Bitcoin's done. Bitcoin is lagging, like seriously lagging. Do you understand? This is why it's alt season, and this is why the bull market has started and the bear market's over. That's my case. Guys, let me know what you think. MB says, we're following the Forbes midterm election cycle to the T. Q4 is going to boom. Pull up LTC BTC chart. MB says. All right, let's pull up LTC BTC chart. Let's see right here. Let's do the Binance. Would Binance? Yeah, Binance would probably be the more complete one. And just to preface, I don't really use these charts, non-USD or USDT denominated charts. I did in the past when I traded using Bitcoin, because I had to, right? Because there were no stable coins when I started trading crypto. So you had to trade your Bitcoin for, Litecoin and whatever. So I think these charts have gotten less and less popular, but, people still use them, which is fine. And this is a good way, also to know, should I be holding Bitcoin or X coin, right? But it's clear, look at this. You're essentially forming let's put it on log to faithfully represent this. Okay, let's do two things. I don't like this wick, but I don't know why it's there. Okay, so I'm gonna check another chart and see if it's there. But yeah, I think, comparing apples to apples is the easiest thing. So I use USD/USDT charts, It's easy for me to see trends throughout the market. But there's nothing wrong about this. It's less efficient, I think. Looking at these non-USD or USDT denominated charts. Okay, this is clear. This is very clear, right? This is what would you call it? A bull flag. This is a really easy pattern, okay? For my pattern traders out there, this is textbook. Okay? And this is your flagpole right here. Okay, this is like, whoops. This is your kind of quintessential, textbook bull flag. Here's your flagpole. Okay? So that means at this point in 2017, Litecoin was gaining against Bitcoin, right? And then for about 4 or 5 years, Litecoin slowly bled against Bitcoin, right, in this small range of accumulation. And when this breaks to the upside, you're likely to target, obviously you're going to gain against Bitcoin, but more specifically, you're going to gain against Bitcoin by this much. Okay, by this much. So, however long this takes, you're likely to gain against Bitcoin by this much. By about a lot. 154,000%, 155,000%. Okay? So for 4 or 5 years, you've been accumulating. This is exactly what we were talking about before. This is an accumulation range. Okay? An accumulation range breaks to the upside. A distribution range breaks to the downside. This is going to break to the upside. Okay? And in here, let's get a little more specific. So let's zoom in to this accumulation range. And what do we know about any kind of corrective patterns? According to Elliott wave theory, every corrective pattern, every corrective wave happens in threes or flavors of threes, okay? So when we say flavors of threes, we also count triple threes, like WXYXZs. Even though that's a 5-wave move, we count it as 2 3-wave moves with intermittent X waves. Okay, so WXY, that's your first 3 with your X1, and then XZ. So the X2 is your second intermittent X. Do you see? So we can even try and see if you have a a flavor of 3 or a 5-wave move here, a triple 3 or double 3. For me, this would be your first, let's see. Actually, you would start here. Your correction would start down, yeah? So technically it would be like this. This is your first wave. I think this is the second wave. I think this is a huge third wave right there. Do you see that? Like, I look at these so often, and I understand if you're like, what the hell are you talking about? Like, it doesn't make any sense to me. I don't see what you're seeing. But I think, the more you look at these, the more you'll be able to distinguish them. Look at gold, in a 20-year triple 3 correction. Your eye will kind of start habituating to these patterns. So you see here, I think your first is clearly a 3-wave move, right? And then you have a counter move, okay? So this would be your W, this would be your X, and I think that this whole move right here is a massive flat correction. W, X, Y. That's what I'm seeing. Does anybody see that? So I think this was simply a double 3, right? This was simply a double 3. So the double represents or signifies or refers to the 3-wave move in W and the 3-wave move in Y. X is considered kind of like a joiner or a conjoiner, okay? And remember, even though we're counting this as a WXY, within the reason we call them complex waves in Elliott wave theory is within every wave every wave can be made up of other complex waves. So within this Y wave, you probably have a triple 3 or something like that, right? That's why these are extremely challenging to count as they form. But once they're done, right, and it's easier to kind of look at them on a high time frame using pattern analysis and saying, okay, whatever is going on here, it's done. Just given how this support and this resistance are playing out. Do you understand? Like, I see a pattern, I see a falling wedge, and this falling wedge is looking to break out to the upside, as you can see right here, okay? And you can also see your first impulsive move right here. Do you see that? So let's just zoom in. Okay. So again, I don't care. Like, I don't even know what... I can't read stats, and I don't care to, habituate myself to, denominate my winnings or whatever. I used to do that in the beginning when I first started crypto. I didn't know much. I was like, okay, Bitcoin is everything. Like, I need to start thinking in terms of sats and accumulating sats and stuff like that. I almost broke my brain trying to figure out how to do it. But the easiest way is just to make as much USDT or USDC, whatever you use, or USD as you possibly can. And if you want Bitcoin, then you can buy it. Okay, we're not at a point where there's no supply and you can't buy Bitcoin. You can buy Bitcoin as long as you have the USDT or the USD. So I think this is useful, not necessarily to find valuations, because it's hard to wrap your head around the sats, and then like to get really accurate with projecting the sats and all that stuff. It's kind of unnecessary now that we have stable coins. I think this is useful because you can see patterns. But the patterns that we're seeing are patterns that we saw in Bitcoin dominance, right? We didn't have to look at this. We know that any altcoin traded against Bitcoin is more than likely going to show that altcoin gaining significantly against Bitcoin for this coming bull market, right? Because Bitcoin dominance shows us that quite simply, right? I'm a huge proponent of keeping it simple, right? Not complicating things when you don't need to. But here, I think this is clearly impulsive. Okay, not corrective. This is clearly impulsive. And this, to me, looks like a consolidation of some sort. Let's see. Yeah, this looks like a consolidation and a move up. I just don't know where wave 2 is. Maybe it's somewhere in here. I don't know, because this is a weekly time frame. Every bar, or every candle is worth the week's worth of trading. But in any case, I think this breaks up, retests, and then goes. Okay, so that's what I'm saying. You're exactly where you would want to be, right? Because, again, using your skills in pattern trading, you know that most of these triangles or diagonals don't break until the last third, the lower third. So if you divide the triangle into three, you don't get the break. You tend not to get the break before this time right here. Okay, so that's another thing. This is just more information. It's nothing bad about reading these LTC BTC charts or BTC denominated charts. Again, just more information. So let's say you were in the bear market, you would know high probability that you don't get your break until this point. But then again, how do you read a third until it's all finished? It's hard to say, right? It's hard to say. Maybe you're drawing your descending wedge in May, and then you see this and you're like, ooh, we're there, and so you start loading up, but then we're still not done. It's hard to say. But this is more data. MB, I hope this was useful. So MB says Polonix has full history, reset it for Q4, appreciate you. I'm thinking LTC Dash, Neo, Monero, Zcash, XRP, and Stellar will follow. Doge pulled a move before LTC did. Check Doge BTC for reference. Doge was forked from LTC, so the ratio snap is coming. You can compare LTC BTC with Doge BTC. Oh, that's cool. Yeah, let's do that. And I have a huge bag of Doge as well, 5 figures of Doge, so I'm excited for that. I can't read Korean, but our Korean friend says, check Gala USDT, please. Definitely. MB says Q4, October to December 2022, in line with Tim Draper's call of late 2022, early 23. We're hip. All right, so let's look at Gala and Doge BTC. All right, let's have a look. Today we have more time. I don't have to pick up my son until later, and this is kind of celebratory, right? When we're still consolidating, I always feel like streaming, or else I wouldn't do it, but I'm less enthusiastic when we're still consolidating. But on days like this, when we're finally moving, my positions are green, we can breathe, I can stream all night. All right, Doge BTC and Gala, let's load them up before we forget. Okay, let's pull this one up here, Gala USDT on Binance, and then Doge BTC. Yeah, I just got in my Doge position a few days ago, because I was like, I want some Doge. I don't have any Doge, and I want some Doge. I was looking at Doge at 13 cents, but I didn't get in until 5 cents. Doge BTC Binance. Okay. Let's also check the Polonix chart. Let's just compare these. Let's see. Yeah, they're both the same. Okay, let's just use the Polonix. Okay. So let's start with Gala. All right, let's start with Doge BTC. Let's do another BTC denominator chart. Okay, again, starting on the weekly time frame. And yeah, so you have all this consolidation, which proved to be accumulation, because then you got a markup from it, and that markup was in shocker 5 waves. Okay, let's go in the daily time frame so you can see it. Right? And so this is why we use Elliott wave theory, not because, it's a religion, not because it is, they're paying me or anything like that. It's because I look at charts all the time and I don't stop seeing the theory, right? It keeps proving itself. So, I do this for a living. I try to make money by speculating on charts, where they are, where they're going, all that stuff. So I'm going to give myself the best chance to win, because I want to make money to, feed my family and, do all that kind of stuff. So this is why I use Elliott wave theory. People think, I have some attachment to it. It's just because it works. I mean, look at this. You can't make this up. It's very clear. I'm not like, this is not that difficult. You clearly see wave 1, wave 2, wave 3, wave 4, wave 5. Okay? So a 5-wave sequence up for Doge after that big accumulation. Okay? So this is Doge BTC. So that's Doge against BTC. That took 5 waves. So went impulsively from January of 2021 all the way to May of 2021. Okay? So that isn't that long. People think it takes forever to really rip in bull markets. It doesn't. What takes the longest time are the bear markets, the accumulation, right? But the bull markets, they can happen in a number of months, right? So this all... Okay, let's do this. Actually, right here. Okay, so from the bottom of this trend, this impulse, to the top, okay, we put in, it was 126 days, so approximately 4 months. So it took 4 months for Doge to gain 7,600% against BTC. So if you held Bitcoin instead of Doge, it's as if you were in a bear market, right? Because you got 7,000, you increased your Bitcoin holdings by 7,600%, by almost 8,000% in a 4-month period. This is the beauty of altcoins and the beauty of being able to read these alt seasons and when it's wise to hold altcoins against Bitcoin. Even if I love Bitcoin, I'd have to be an idiot knowing what I know and doing what I do and all the analysis that I do to hold a penny of Bitcoin for the next 6 months because of something like this. Do you see what I mean? So that was 4 months, right? So what happens after 5 waves? We know in Elliott wave theory, after 5 waves, you get 3 waves. So you get a 3-wave version or variety of a sort of correction. And that correction typically takes you between the 382 and the 618 of the prevailing 5-wave trend. And what do you see here? Again, this is why I use Elliott wave theory, because it works. And why do I say it works? Because I look at charts every day. I work like 16 hours a day, but it's not work to me, right? And I'm not paid by the hour. I work for myself, and I look at a disturbing number of charts. Okay, I look at charts on the toilet, in bed, I look at charts at my desk, I look at charts when I'm eating, and I keep seeing these same patterns. This is why I use Elliott wave theory. I see 5 waves up, I see 3 waves down, between 382 and 618. Okay, that's for wave 2. So this is clearly a wave 1, wave 2 situation. Not only, I'm going to tell you this right here, given this chart right here, not only will Doge repeat this, but it's going to do it even more. Dogecoin is going to gain even more against Bitcoin than it did the first time. Why can I confidently say that? Again, using Elliott wave theory, we know that wave 1, wave 2 leads into wave 3, and wave 3 is usually 161.8 to 200% on average more impulsive than wave 1. So if it was 7,000% against Bitcoin or 8,000% against Bitcoin, it can be as much as 16,000%. Right? That's 200% of 7,000. So that's twice 8,000, right? So yeah, 16,000%. So something like 14 to 16,000% of what you would do holding Bitcoin. That's why I literally put $0 into Bitcoin in preparation for this next bull run. Right? This is the theory. Oh, you can't be like, a lot of people don't believe it. That's fine. I wouldn't expect you to believe it. I only believe it because I see it every day. Literally see it every day. I can't unsee it. These patterns are like burnished in my eye and my memory. Okay, so this 3-wave pattern, it was some sort of zigzag, okay, which you do expect in a wave 2 correction. So you get something like this. Let's see. Something like this. Something like that. Or maybe like this. Yeah. Something like this. Okay? It's not that important. And then here you get your consolidation reversal pattern. Okay? You get your consolidation reversal pattern, which is a small range of accumulation, or a small range of accumulation for a markup. This is why the bear market is over, guys. You know, I mean, like, you know, people waiting for Bitcoin to go to 12K, they're gonna wait for a while. You know, you're gonna be there waiting. But that's fine. You know, I don't mind people misreading the market. And look what you see in this nice reversal accumulation pattern. Boom, boom, boom. Where is it? Here we go. Damn it. I never know how to pull that. Here. Nice rounded bottom. Okay? Reversals happen with rounded bottoms and rounded tops. We were looking at the rounded top in DXY. Here's a rounded bottom in the Doge BTC chart. Okay? And again, you can kind of make out an inverse head and shoulders. Again, that is a reversal and bullish pattern. The head and shoulders is a bearish pattern, reversal pattern, but bearish. Okay? So yeah, expect this to break up into another bull run against Bitcoin, lasting again a few months. Okay, and then lastly, what you want to do just to verify this is we saw it was like 4 months worth up, and how long did it take down? About 300 days. So what would that be? Almost 3 times. Okay. And that is, you could say there's no parity, but I don't like to say equality. If you follow the channel, you'll know I don't like to say that waves of the same degree have to be equal in time and in price. They just have to be proportional in time and price. I like the guideline, calling that the guideline of proportionality. So if this right here if this correction takes 3 times this, I'm okay with that. Okay, not every correction has to be 1-to-1. You know, you have complex corrections with, which I think this is, that end up being a 3x the time it took for the impulse. Okay, that basically just means that it's more likely than not that your wave 4 correction is sharp and more takes less time. It's not as drawn out. Okay, so yeah, that's Doge BTC. That's exciting, very exciting. All right, Gala for our friend from Korea, and we can see in Gala, this is a truncated chart. Okay. And it could be truncated for a number of reasons. It could be truncated because Gala only came out with their project in 2021, at the end of 2021. But what we can see from this chart is the following. This is likely the end of an impulse, very much likely some sort of wave 4, wave 5 situation. And I mean, my eye just sees this right here. I can't unsee that right there. That is a run-of-the-mill quintessential zigzag correction. Okay, let's put that in properly. Okay, just looking at charts till literally my eyes start to lose their function, I know with a high degree of probability that this is a textbook zigzag. Okay, you can call it an ABC or a WXY. Okay, I want to call this a WXY. Let's see. It doesn't matter. It doesn't matter. Either ABC or WXY, it doesn't matter. Because essentially what you have here is a 3-wave move in A, a 3-wave move in B, and then a 5-wave move in C. No. This is a WXY, and I'm going to tell you why. Okay, although you have a 3-wave move in A, a 3-wave move in B, you clearly have a 3-wave move in C, which would make this a double zigzag, not a regular zigzag. This is not an ABC. This is a WXY. This is a double zigzag. You guys see the difference? It's subtle, but I guess it's important if we want to be accurate. You got to call this a double zigzag. And it's all because in this Y wave right here, you can clearly see it's a 3-wave move, right? 1, 2, oops. Do you see that? 1, 2, 3. That's not wave 1, wave 2. No. That's A, B, C. This is the 5-wave move right here. So you gotta call this in aggregate a WXY. This is a complex correction. It's a double zigzag. This is what Bitcoin put in, okay? And so a lot of the market followed suit. But this is a double zigzag, and they're not that uncommon. You can look it up in Prechter and Frost, okay? They're not that uncommon. But before Bitcoin put it in this bear market, it wasn't in my ken. It wasn't something that I was paying attention to. But I can clearly see a WXY, double zigzag, okay? So the end of that declension or that drawdown was on May 12th, as most of our altcoins did get a capitulative volume candle on May 12th, okay? And put in 130 days of accumulation, right? Once again, you have that range, that 130-day range, okay? This is why this is the end of the bear market. For 130 days, you've put in this range, okay? Now let's focus on this. And you put in 2 degrees of AB basing. Here's where you really show your professionalism and your attention to detail. Most people can't read AB basing. Most people don't even know it exists, okay? So you understand that Elliott wave gives you not just, these impulsive waves and some corrective waves, but it gives you the secret, or the secret of the universe, as Ralph Nelson Elliott would call it, the secret to accumulation patterns, and reversal patterns, okay? Even if you know these AB bases happen in this way, it doesn't mean you'll necessarily be able to read them easily. You still have to, you're still probably going to make mistakes. As you can see, I make mistakes all the time. But maybe some of you guys who know about AB basing don't make as many mistakes as I do. You see a big A, which is your initial break of structure, targeting wave 4 of the previous impulse. And you have B wave, which is a counter to wave A, also in 3. And then you have a secondary wave A, which would be right. Let's see, sorry. I'm trying to figure this out. Okay, I think your small A your second degree of AB basing starts there. And then you have a 1, 2, 3 right there. You have a drawn out counter wave of the second degree. That's your small b. Okay. And then you have an even smaller version of this AB basing, a mini pivot right there. This is why it's the end of the bear market. Okay. You have and just let's say you didn't know anything about AB basing, okay? And you counted your zigzag, right? Let's see. You know nothing about AB basing. Here, let's do this properly. Guys, if you're getting value, please like, share, and subscribe. Let's say you know nothing about AB basing, yeah? You know just, a few basics, and that's fine. You can get really far with just the basics. Knowing and applying the basics fastidiously, you can get really far, okay? You just have to have good basics. Let's say you read this double zigzag, okay? You're like, oh, I've seen this before. This is a double zigzag pattern. This is my corrective pattern, okay? I'm going to measure it, okay? So you take your Fibonacci extension tool, your W wave, retracement of the X wave, and boom, you get your 1, 2, 3, 6, okay? Guys, can't make this shit up. If you go in any book on Elliott wave theory worth its salt, it'll tell you that most Y waves or C waves, a 3-wave corrective structures extend to between the 1 and the 1, 2, 3, 6 of the A wave, retracement of the B wave, or in this case, the W wave, retracement of the X wave. What do you get here? 1, 2, 3, 6, boom, right there. Gala hit that 1, 2, 3, 6 maximum extension. Doesn't mean you can't go further, but the 1, 2, 3, 6 is typically, again, all probabilistic on, just on the balance of probability. This is where your impulse ends, okay? So on the 1, 2, 3, 6, you're done. May 12th, you started your consolidation reversal pattern, right? You know nothing about AB basing, right? In this instance, right? You're just reading a range. And so you read this range and you're like, okay, whatever this is, it's most likely, balance of probability, an accumulation range for a markup, okay? So you don't know anything about AB basing, you're not getting into all of that. And you see that, sorry, I'm just going to change the height of the range for a second. The range would actually come up all the way here because that A wave took you and set the parameters. It set the height of the range. Your A wave, your initial breakup structure, sets the height of the range. So you basically played on the bottom of the range, and now you're forming most likely some bullish divergence. So you know nothing about AB basing, but you know a little bit about, something about bullish divergences, right? You have your stochastic RSI momentum indicator, and it's simple enough. You can read a bullish divergence or two. So that's what you do. And what do? You see these two bottoms, okay? So you connect the lows right here. You connect the lows from August 28th to September 18th, okay? On the price action, you make a lower low. And then you look at your momentum indicator and you see that you crossed bullish. So you've confirmed strong bullish divergence on the daily time frame right there, okay? From August 28th to September 18th, okay? So this tells you, so everything's contextual, everything's probabilistic. You're kind of tying a whole, you're making a thesis, you're making a story, a thesis based off of a number of different clues, okay? And you're tying them together and making a story. And you're saying that this is the bottom of the bear market, quite literally, the nominal bottom of the bear market. You can't get Gala any cheaper than this, all right? Because you measured your WXY, your double zigzag, you saw that it reached the full extent of the 1, 2, 3, 6, which is balance of probability, probabilistically the maximum extent of an impulse in correction, right? given the first wave retracement of the second wave, okay, of your 3-wave correction. And then you've been dilly-dallying in this range, and you're like, well, okay, we can continue to go in this range, but I'm reading a strong bullish divergence, which should, at the very least, take me to the top of this range, or the median, which I know, because I study, ranges, is a significant point of resistance. You can see it was resistance here, it was resistance here. Middle of the range is resistance. When you're below it, it's support. When you're above it, support here, support here. Guys, I've said this. I don't say it because it's a rule and I read it somewhere. I say it because I look at charts, random charts. I can chart anything and I see the same patterns over and over again. So I use it. I'm not going to put $50,000 on the line because somebody in some book said something. I went to school. I went to a lot of schools. I went to big schools. Like, I went to the #1 school in the country. I don't care who wrote the book. I've written a book before. You guys can look up my book. Just because somebody writes it in a book doesn't mean it's true. I only take something as true as if I see it over and over and over again, and I prove it to myself. I do my own research, okay? So I'm not just going to parrot ideas just because they're written in a book or because everybody says it. I'm going to have to prove it to myself. So the things I'm telling you, I'm putting money on the line, 5 figures, sometimes 6 figures on the line, using these theories because I see them over and over and over again. Again, range trading. The middle of the range is resistance when you're below it, support when you're above it. The bottom is support, the top is resistance. Very simple. Keep it stupid simple, right? Simple applications of good rules yield amazing results. You don't have to get into a million different indicators, a million different theories. You just use a few indicators, know them well, and you can kill. All right? So we have a drop down, a wick down below the range, but this is bullish because it's kind of like your Wyckoff spring, where you're really testing the last sellers, testing the last points of supply over here for a massive markup, and your bullish divergence on the daily time frame is giving you that much indication. Okay? That's what I see in Gala. You're literally buying the bottom here, going to at least the middle, but most likely the top and up. Okay, so that was Gala. Hope that was useful. Guys, if you're getting value, like, share, and subscribe. Don't see anybody talking about this. Most people can't do analysis, and the people that do probably sell. Okay? I'm not selling anything. I don't need to sell you guys anything. The market gives me everything. MB says, last request, FLM USD. Okay? MB says, Binance chart has most length of history of the NEO ecosystem. So FLM is apparently from the NEO ecosystem. And our Korean friend says, X through Y is 1, 2, 3, 4, 5 impulse. So you're probably referring to what I just discussed, the WXY. Okay, and so, no. Okay, so yeah, I understand your question. Okay, so our Korean friend asks, X through Y is a 1, 2, 3, 4, 5 impulse. And my answer to that is no. No, it's not. That's what makes it a WXY versus an ABC. I know this is kind of getting into the weeds. This is kind of advanced stuff, but it's important because at the end of the day, you want to be as precise as possible. And, when you're reading high time frames, a small mistake can lead to a big error and a lot of money lost. So this is not 1, 2, 3, 4, 5. And a lot of people will read it as this. A lot of people are reading Bitcoin's chart as this. That's an amateur mistake. It's an amateur mistake because knowing what an impulse looks like, right? You can't make that mistake. If you really know your impulses, you can't make that mistake because here you clearly see 3 waves. But in an impulse, you have to see 5 waves. And why is this clearly 3 waves? Well, very clearly, if you zoom in, you know it's 3 waves because if this were wave 2, it couldn't be because wave 1, wave 2 retrace beyond the 618 of wave 1. That's too much of a retracement for a regular 53535 impulse, okay? I know in some diagonals you can get retracements beyond the 618, which is exceedingly rare. Typically, if you just use the rule that wave 2 shouldn't retrace beyond the 0618 of wave 1, you'll thank yourself, okay? This is clearly a corrective move. This is a 3-wave move, ABC, okay? And then this is another 3-wave move, ABC. So this is an A wave, this is a B wave. That's your 1, 2, 3, 4, 5 impulse. Everybody, so amateur Elliottians, they'll read everything. Everything isn't 1, 2, 3, 4, 5 because that's all they know. So when all you have is a hammer, everything's a nail, right? Because corrective sequences are more advanced and it takes a lot longer to learn and to really get comfortable with, they won't talk about corrective waves as much. They'll see everything as 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, because that's where they stopped their understanding, their learning of Elliott wave theory. Okay, so I hope that answers your question. Now let's get into our FLM, FLM USD, yeah, FLM USD, and he said it was, you want to look at the Binance, okay, FLM USD. Okay, we'll get this right here. Okay, again, welcome to the live stream. If you guys are just coming, this is my case for why the bear market is over. Okay, the bear market is over. My positions say as much. My positions are green as shit. And, you know, we've broken some important resistances, made some important moves. I'm very happy not to be trading for about 6-7 months. I don't want to touch positions for the duration of the bull market. You know, it's been my plan all along. Accumulate at the bottom of the bear market and just do other things while they gain steam. I may take some profit if I need to pay bills, if I don't have enough money, but other than that, I'm not touching anything until it gets to maturity. And then obviously during the course of the bear market, I'll be talking about how I'm looking to top, or to call the top of the market, what I'm looking for, okay, using the stochastic RSI, using price action, all that stuff. So FLM, you can see, again, you have a truncated chart, but we do have some information. You don't always have, like, you know, a clean, like, oh, nice 5 waves here. This, a lot of corrective price action, okay? Most people can't read corrective price action, but, you know, this is something we've gotten comfortable with. And to get comfortable with corrective price action is to get comfortable with being wrong. I mean, if you follow my work, you'll see I'm not 100% on my reads, on my small time frame reads. Large time frame reads, more accurate, okay? But reading corrective price action inherently comes with a level of confusion and a lower probability of accuracy, but it's still extremely useful. If you're really interested in taking your trading and your charting further, get comfortable with reading corrective price action. Most of the time, the market's in corrective price action, not in impulsive price action. Okay, that goes back to what I just said. Not everything's a 1, 2, 3, 4, 5. It seldom is in impulse. All right. So you have what I think is a series of corrective moves here. I see. Okay, here I see a zigzag, which is a 5-wave move, but with a corrective base, and then a 3-wave move down, respecting the 0618, basically targeting the 0.5 to 0618 of this. Okay, so I would say, if I'm reading this, whatever is coming down. This is kind of a move, a big move, probably some sort of impulse to the downside in a corrective move. Okay, and this, I would say, is a big initial break of structure. Okay. There's so much. It's tough because one of the reasons I stopped myself is you can have what, like, you see in Litecoin, which is a leading diagonal, where you see corrective moves, but you're in impulse. So let's not get ahead of ourselves. Let me just say I don't know. I have no idea what this is. I'm not even going to pretend to know. Because like I said, you can form corrective moves in impulsive moves, your leading diagonals, right? So let's just say, for all intents and purposes, we don't know what this is, but it looks corrective. It could be corrections in impulse, it could be corrections in corrective sequences. We don't know. Let's focus on this. I want to focus on this because this is, I think, even more important, right? I'm just going to accept that I don't know what this is, and it's okay. Okay, I know what I don't know. All right, so I'm gonna zoom in to. There we go. Lo and behold, this is our accumulation, and here's where I kind of use my knowledge of the market at large to say, hey, I know what happened on May 12th, right? We had a capitulative candle on May 12th. Boom. Do you guys see that? I don't say May 12th is the capitulative candle, the end of the big move down, for no reason. It's just every single chart, 98% of the charts that I look at, and I look at a lot of charts. 98. I have to do special eye exercises to keep from going blind. I guarantee you. 98% of the charts are showing me this capitulative volume candle. If I turn on my volume, I'm not even going to bother. But you could see a strong volume candle showing the end of whatever trend that was. Okay, and we don't really care what that trend was in context of reading this particular chart. We're just going to assume that this is a turning point right here, and everything after this is our accumulation range. Okay, so this is the beauty of reading every chart against the same underlying asset, USD or USDT. You start to see patterns, and those patterns are strong, right? Big A, initial break of structure targeting wave 4 of the previous trend. So I put my money on the fact that a wave 4 was somewhere here. Okay, every three-wave structure has a corresponding three-wave move. Okay. I think the corresponding three-wave move is this. This is my big B, a flat correction that takes me down here. Okay, so what I'm going to do now is I'm going to zoom into this. Okay, so let's zoom into August 28th, 29th. All right, let's go on the 4-hourly time frame, drop down. So I guess, another thing I mentioned, do you see in my analysis, to get context, I'm always going from outside in. It's very important to get context, or else you don't know where you're at. Okay, so August 28th was right here. I think that was the end. And here, very interesting, I see we're starting to put in some sort of consolidation, but it's a falling consolidation. But on my, so let's jump up on the daily time frame, and I do have what I suspected, which is strong bullish divergence right here. Okay, so you guys can see this from here, from August 28th, you make lower lows on the charts, okay, very clearly. But then on my momentum indicator on the daily time frame, again, this stochastic RSI is very useful for these divergences. You can see confirmed strong bullish divergence. Confirmed, right? It's confirmed because we got crosses of the K and D lines, right? So price action going down, momentum going up, confirmed K and D lines are crossed bullish. Do expect to break this channel up and out. This is the end of the bear market. Now, why is it important not just to look at this daily time frame? We have strong bullish divergence on the daily time frame on this chart. But remember what you're doing. Remember your larger context. And this is why you always want to have a larger context. You're at a crucial support. This is a massive range that's lasted almost 700 days. So you're on understand where you're at. You're on a support line you're on a 700-day support line, 2+ years support right here, okay? And you're at the bottom of this support. So if you look at just this range right here for your accumulation, consolidation, reversal, you're at this support. You're at massive support, and you're crossed bullish on your daily stochastic RSI. This is the context. This is how you want to read these assets. High time frame to small time frame. Make a thesis, a high probability thesis. Nothing is 100%. You do not know 100%, but it's highly likely that this is going to move up and out and target at the very least. Let's go back in our daily. At the very least, you're targeting the tops of this range, firstly, and then at the very least, you're likely targeting not only the top of this range, but the top of this range. Do you see how that works? That's how I do it. There's no crystal ball, no opinions, all probability based, all based on your skills of reading context, reading patterns. That's it. The bull market is over. It's a highly probable, highly likely thing. But again, you can corroborate this. This is just information from this chart. I would always say, at the end of the day, I'll live and die off of the read. Let's see. Right here. I'm living and dying off of this read. And this is why I put so much emphasis on the DXY. If the DXY is going up and up and up and not at resistance, I don't know if I'm saying any of this, right? Like, none of this really matters, to be honest. But because the DXY is showing to be at resistance, because the DXY is looking toppish and proving with a high degree of probability to be in reversal to the downside, and when it drops, it's going to drop like a rock, I'm looking for bullish cases in equities, commodities, and so on and so forth, right? So that's pretty much how I'm doing it. Yeah, guys, that's my case. So MB says it came out September 30th, 2020, so the history is this length. Yeah, for sure. Well, guys, it's about that time. Gotta get ready to go get my son, but it's been a pleasure as always. Hope you're well positioned to take advantage of this coming bull market, and I do think this bear market is over. Not financial advice, but that's just how I look at the market and why I've explained at length in this video and others. So yeah, that's the stream. Hope this was helpful. Hope this was useful. If you find it helpful at all, or if you found it helpful at all, definitely give it a like, share, subscribe, and I will see you on tomorrow's stream. Take care.